All right, good afternoon, everyone. My name is Jeanmonod. I'm Regional Vice President of Sales here at Angel Oak Mortgage Solutions. Today, we're going to cover our closed-end second liens here. So we'll just give everyone a minute to log on, and I will introduce our subject matter expert. You're all probably, if you've been on these webinars, Scotty's usually a big participant in all of them. So we'll get started here in about 30 seconds. Hope everyone had a great Thanksgiving with their family and loved ones, and looking forward to a great holiday season and finishing the year strong. So take a look over here. Still people logging in. Give us about another 30 seconds. Just some things. This is going to be recorded. This will be sent out before end of day tomorrow. In the past, there's a lot of great questions that come in through the queue. Put those questions in there. Myself and Scott will try to get to them all. If we don't, we will have your account executive reach out to you. So give it about another 10 seconds and we'll get started here. All righty. It's a minute after the top of the hour. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. I'm honored to have our subject matter expert, Scott Gruebele. Scott, what is it, 7+ years now, Scott?
Yep, over 7 years with Angel Oak Mortgage Solutions. I'm an account executive down here in Broward County in South Florida. So thanks to everybody for hopping on today to discuss this program that I think is really fit for the current environment that we're in the industry.
Yeah, Scott, we're going to share some stats, and really, this is really how you can grow your business. I know everyone's kind of been a little bit, it's been a tough year, yeah, but I think we can help you grow your business with the second lien and really make you, I've heard Barry Habib said this, make you a debt advisor to your clients. And yep. I think we can really help them here. So let's jump into it. So everything we're going to do here today, we'll show you a couple of PowerPoint slides, but everything you're going to do here today is navigated from our website, and it's real easy to use. And so let's jump into it, Scotty. Let's talk about the second lien, our closed-end second lien, and just a teaser. HELOCs will be coming soon. So, Scotty, Can you see everything up here as you go through the highlights?
Yep, I can see everything nice and clear. So to kind of take a step back and go a little high level before we dive into the details here, guys, is obviously, as we mentioned, we all know what the state of the market is today. Rates are very high. We're still working through this pricing situation. All expectations are obviously for rates to start to come down in 2024, but it looks like they're not going to come down as quickly as many have anticipated. We all listen to Barry Habib in this industry, right? He's been on target probably more than anybody else, and I think he's even looking at probably somewhere in the 7s towards the end of the year. So the fact of the matter is, everybody on this call probably has a huge book of business, as well as many contacts of borrowers that have purchased a property prior to, let's say, the middle of 2022. Every single one of those homeowners are sitting on mortgages, first mortgages, that are locked in at very favorable rates. And that could vary anywhere from, who knows, 2s to, 4s, 5s, etc. With that said, and we're going to go over some statistics, every single one of those homeowners are also sitting on a pretty good chunk of equity in those properties. And as times have changed in the last year or so, obviously with inflation and everything going on with the economy, we also know that more than likely the majority of those homeowners are probably sitting on some sort of debt. So the closed-end second mortgage program, the HELOCs that we're now starting to see come a little bit more out there, more lenders are starting to offer them in the marketplace. They are bottom line designed for those homeowners to be able to tap into that equity that they might want to tap into, whether it be to consolidate some high interest rate debt, whether it be to maybe do some upgrades on their properties, whatever the case may be. It allows them to tap into that equity and pull some of that equity without touching that first mortgage whatsoever. That first mortgage with that good low rate of 3.5%, they can keep it intact. And as we go into the highlights of the program, what you're going to see is that the way we do our closed-end second mortgage at Angel Oak is geared towards what we are experts in, and that is a non-QM borrower. The way that we're going to qualify them, you're going to see is designed directly for our bread and butter and what we do, which is investors, self-employed borrowers, and anybody that maybe is a full doc non-QM borrower. So we'll dive into that. I do also want to cover from the very top, this is a closed-end second mortgage, guys. What does that mean? That means it's originated, it's closed, it's funded, just like a first mortgage. And yes, that means that when it closes, we are paying a lump sum to that borrower. They're walking away with whatever cash they're pulling from the closed-end second mortgage. It's not like a home equity line of credit where they can pull out just what they need today, start making monthly payments, pay some of that back, et cetera. Like John mentioned, that's something we're going to be offering in the near future. And I'm pretty confident that'll be geared towards a non-QM borrower as well. But this particular one, which I like very much, is a straight closed-end loan. You're going to close it, you're going to walk away with your cash, and you're going to go do what you need to do.
Hey, Scotty, you threw out some stats there. I'm gonna deviate a little bit here. So you mentioned, how favorable rates were, right during the last decade or so. So I have some stats here, and this is a graph that will show it, but I'll throw some stats out there. 63% of the mortgages in the U.S. have a rate of 2.5% to 4%. 85% have a rate of 6 or less. So Scotty, you mentioned, rates coming down maybe in 2024. 85% of the people have a rate of 6% or less. I don't see, and again, I'm not an economist, but I don't see them dropping 150 basis points next year. They might drop 25, 50, who knows? If they drop more than that, great. But these are some really, and 40% of the mortgage, 40% of the homes in the U.S. don't have mortgages on them, Scotty.
That's free and clear.
So yeah, this is a great, and then go on top of that, how low the rates are. Look at what the appreciation has done across the United States. Since 2019, the average appreciation is 47%. And Scotty, since 2018, in Florida alone, it's up 73%.
Yeah, I was going to say, my market's a little bit higher than that, and many others in the country.
Yeah, so, you look at the growth there, and now, throw on top of this, credit card balance, everyone's heard this, over $1 trillion with an average interest rate of almost 28%. And I talked to someone a month ago, and they applied for a Macy's credit card, and it was 31.47%. That's nuts. And here's another stat. If you really look here, Scott, Americans in 2022, Americans paid $120 billion in credit card interest and fees alone. And then we know the repayment of student loans, 1.6 trillion. So there's a lot of debt out there, and we're just, go ahead, Scott.
I said, yeah, no, agree, 100%, a ton of debt out there.
Yeah, we're going to talk about that later, but you hit on some of those points, Scott, and I just wanted to, just bring those numbers home to people. So let's talk about how we can help people take advantage of this closed-end second, Scotty, and, let's do it.
Let's dive right into it. Okay, so the closed-end second mortgage, the minimum credit score requirement for the program is going to be a 700. You're going to see that we offer this on a bank statement program as well. Currently, the minimum credit score for bank statements is 720, and we will go up to an 85% CLTV, which is very, very strong in the marketplace. Your loan amounts can go up to 500,000. So yes, your borrower can tap into up to 500K of equity sitting in their property and take out a $500,000 closed-end second mortgage that they're getting a check for at closing. On the minimum side, if you have people that maybe have some condos or some smaller properties, they can go up to 75,000 on the minimum side and pull that amount out in cash. So there's a lot of flexibility there. Everything is a 30-year fix. Now this is big, and this is one of the reasons why I personally like the closed-end second mortgage, is that whatever rate we lock in up front is fixed. So your borrower now knows exactly what their payment is going to be for this closed-end second mortgage. They can add it into whatever their payment is on their first mortgage, and they can budget themselves accordingly because that rate's not going to change. However, if they choose that they want a lower amortization period, we can do this on a 20-year amortization, 50-year amortization, or 10 years, and all of the above are fixed. Cash out or rate and term refi. Look, at the end of the day, this just means either way, they're priced the same way. You're going to be able to tap into that equity. If you want to pay off some liabilities directly through the closing, you can do that, or you can just take a check and the borrower can go and pay them off themselves accordingly. Here's a big one. Most of these that you see in the marketplace are for primary residences only. As a matter of fact, I'm pretty confident almost all of the HELOCs out there are for primary residences only. So if you have a borrower that has a second home or an investment property and they want to tap into that equity for whatever reason, this program will allow that. Again, home equity lines usually cannot get done on a second or an investment property. This closed-end second mortgage can. That's a big one when we start to go into some of the other ways to qualify, because think about how many borrowers out there have purchased investment properties using DSCR loans, using bank statement loans, using any non-QM program, maybe because they wanted to close in the name of an LLC. Guess what? We're okay with that. If that property is owned in the LLC, you can go take out the closed-end second mortgage, tap into that equity, and close in the name of that same LLC. So a lot of benefits in the fact that we're offering the second home and investment properties. Single families are okay. Townhouses are okay, of course. And then again, because we allow investment properties, we can go up to 2 units. We can do duplexes, and we can also do warrantable condos. At this time, we're not offering non-warrantable condos on the program, but as it evolves and it has a little more tenure in the marketplace, we could always see those things start to open up. Bank statements. So this is the biggest part and what I think really makes our closed-end second program unique in the marketplace, even with other non-QM lenders that offer it, is the fact that we can qualify your borrower using 12 or 24 months business or personal bank statements, or we can do the 1099 only program. And in addition to that, if your borrower is a full doc borrower, obviously we can use full doc to qualify.
Scott, I'll let you take a breath there. So, one of the, we talk about the fastest growing workforce in the country are self-employed borrowers, right?
Yep.
There are more self-employed borrowers in this country than there are VA borrowers. So, and you talk about appreciation, how much, rates on their primary, their rates on their mortgages are really low. But I'll throw a couple of stats out there. In 2020, new business applications grew by 24% over 2019. It was the largest increase in new business applications. And in 2021, that continued to increase by 22% over 2020. So, and this isn't slowing down. I mean, everyone is creating their own business or their side hustle. So when you talk about bank statements, Scott, it's huge. The opportunity is huge out there.
It's huge. And what I've said in conversations I've had with my originators that I'm an AE for is, guys, this is real simple. Anybody you closed a bank statement loan for prior to 2023 is a potential candidate for this program. And I can tell you one thing for certain, as a former business owner and knowing many business owners, they're always looking for cash. They're always looking for a little, whether it be working capital, whether it be expansion of the business, whether it be, they're always looking for some cash to do something. So again, like I said earlier, if you've closed a bank statement loan prior to 2023, there is absolutely no reason why you as a loan originator should not be reaching out to that client of yours and saying, hey, here's a new program we're offering in case you're looking to tap into any of your equity, consolidate debt, pull out some cash. We can do it without having to touch that first mortgage I did for you back in 2021, 2022, whatever the case may be. And go ahead, John, I see something ready. I see you about to say it.
Scotty, what have you been doing? What have we been doing on behalf of our loan officers, right?
Yep.
We've pulled a database of people that they've closed loans with, whether it's bank statements or debt service coverage, and we've reintroduced them to say, hey, go work with these borrowers. Remember Joe Smith, who closed a bank statement loan with us 5 years ago, and we've told them how much the house has appreciated since then. We told them what their value of what the loan amount was, and then we showed them what they're probably the loan amount, the payoff is now. So we're doing all the math and all the heavy lifting for you guys. It's really just go back out and introduce yourself to these borrowers. I mean,
we have the data for you. If anybody on this call has ever closed a loan with Angel Oak, a bank statement loan with Angel Oak, just reach out to your AE. We have the data. We can give you a list of every bank statement loan you've closed with us, and you can start making some calls and tapping into them. In this market, guys, as we all know, everybody's looking for volume. What a way to generate volume in this market. And not only you're generating volume, but let's face it, you're doing your borrower a service. There's a lot of borrowers out there that are struggling, and you don't know what you don't know. They don't know this program's available. They have no idea they might be able to tap into that equity and pull that cash. So going back to what we've always said is being a true advisor to your client and not just a transactional loan officer. Hey, what better way if you're reaching out and saying, hey, look, I know interest rates are high, things are tough. If you need any cash, we can help you out. Here's the program. Here's how it works. We can qualify you using those same bank statements. But getting back to the highlights here, John, we mentioned the bank statement program, 12 or 24 months. We mentioned that we can do this on a full doc. We go up to a 50% DTI, which I think is very strong, again, considering this is a second mortgage type of program. We do have to obviously count the payment on the primary into the DTI, of course. But again, when we're qualifying using those bank statement programs, should be a lot easier to do that. Owner-occupied program is not available in the state of Texas. Sorry, anybody out there in Texas, just have to throw out a couple of those disclaimers. Program is not available currently in the state of Tennessee. Those are obviously state regulations as to why.
But just for second homes and investment properties in Texas, we're good. There's also, and if you're in California, there's an APR. So working with your account executive, just be aware of those things. But hopefully Texas primary, we'll get there soon enough. But yeah, those are. So Scott, we had a couple questions coming in here. Let me. She's on the first lien. Basically, you were behind. Yeah. So yeah, we would go a non-QM like Scott mentioned earlier. So just want to, Scott mentioned earlier, we will do this behind a first non-QM loan too. So, 100%. And we'll do it on bank statements, full doc, like you said, any way we can. Just want to, let me look at some of these questions that have been coming in.
So, and while you do that, John, I'll expand on that a little bit. So the closed-end second mortgage can go behind a conventional first mortgage, a non-QM first mortgage. I mean, really there's complete flexibility. It doesn't matter how that borrower originated that first mortgage. We can go behind and close the closed-end second for them.
Yeah, so Scott, some of the, a lot of the questions we've already answered through the conversation we've been having here. But, when we talked the other day, some of the things, talk about, the loan application, if you don't mind.
Yeah. So in originating a few of these, and look, I know for everybody on the call, including us as AEs and us as a lender, this program is new. When was the last time, there was a big need for second mortgages or HELOCs in the mortgage space? It's been a while, but here we are. So there's, some quirks that everybody's working through. One of the things that I've noticed on the 1003 is a lot of originators I've worked with on these loans are not yet familiar with how they can enter the current balance on the first mortgage while still entering what the new loan amount is going to be and the terms are going to be on this closed-end second. You're basically completing a 1003 just like you would on a first mortgage when the borrower is applying for the closed-end second. You're sending us a credit report. You can price it right on our website, which we're going to go through. And then you're submitting those loans to us for a pre-approval or pre-qualification, just the same way you've done for first mortgages. So if anybody's done a first mortgage with Angel Oak, the process is identical. But for you guys in your LOS systems, and I know everybody works with a different one, those are the only things you want to make sure you look out for. Make sure you're accounting for the balance on the first mortgage. You can usually enter it in your REO section. That's where we can pick it up as account executives. We can see it. Maybe your system doesn't allow you to calculate a CLTV yet, or you haven't figured out how to do that. But as long as you have it in your schedule of real estate owned, we can identify the primary there, and we can do the math for you on totaling the primary and the new loan to determine the CLTV and ultimately the interest rate. So that's a big point there. One of the other questions, John, that I've received a lot is on the appraisal side of things, right?
Yeah.
So the appraisal side is the one part that's going to be treated a little bit differently than what you're going to see on a first mortgage. And it provides more flexibility and puts a little bit more power into your hands as the originator. So on appraisals for closed-end second mortgages, any loan amounts below $250,000, you don't need a full appraisal for. We can actually accept a Clear Capital AVM, which you guys would be able to order directly through Clear Capital. We will accept a BPO, or what I've seen most of my originators do because they're most familiar with is order a drive-by through the AMC that you work with, or any of our approved AMCs for that matter. So if your loan amount's under 250, those are your options: Clear Capital AVM, BPO, drive-by appraisal. We'll take a full appraisal if you want to get one, but those three options are usually a little bit more inexpensive and easier to get. Now, if your loan amount is over 250, it's simple. We just order a standard appraisal, just like we always have for first mortgages.
Yeah, Scott, Samantha has a question, and I think we answered it, Samantha. You know, it's not just for bank statements for self-employed borrowers. W-2, full doc, you know,
Yeah.
we'll go either way, Samantha. So thank you for that question.
Yeah,
A couple other.
maybe overemphasizing the non-QM parts of it, but absolutely, if your borrower is a full doc borrower, maybe you close them conventionally, and you can't, obviously, this conventional, you can't get this program. Their
Right.
conventional lenders do not offer it. No problem, we can do full doc, absolutely.
Yeah, we're emphasizing bank statements because that's a large percentage of our business. So,
Yeah.
and again, we threw out the stats of, you know, that fastest growing segment of the workforce is that self-employed borrower. So, couple other quick questions here, Scott. And just so everyone knows, this is being recorded. We will get this out to you before end of day tomorrow. We're going to also talk a little bit. We're going to, you know, we're going to show you how to price these in our quick quote engine. And Scott mentioned it. We even built a blended rate calculator for you. So this will take all the guesswork out of your hands. So we're going to get to that. We're going to go to our marketing portal, and we're going to show you, we even built a flyer for you on closed-end second. So a lot of this stuff has been done for you. And you know, Scott, the numbers I'm hearing right now, we've had this maybe about a month now. The average loan amount on these second liens is around $250.
Yeah, it actually blew us all away. It's been up there, 250,000, and then we've seen a considerable amount in certain markets where the average is more in the 350 range. So these are good loan amounts, no doubt about it. I mean, you're going to generate some good volume on these. It's kind of interesting when you start to talk to borrowers exactly how much equity they have and exactly how much cash they might be interested in tapping into.
Yeah, and Rhonda, Scott mentioned it earlier. This is only goes up to two unit. We will not do a 3 or 4 unit yet, you know, but if you've worked with Angelo, you know, once we start doing these loans and how they perform, we'll expand these guidelines, I'm sure. So,
yeah, 100%. I mean, it's all, you know, as we know, it's how secondary markets digest these products and programs, and the more they get comfortable and familiar with them and they perform, we start to see guidelines expand on them. I think we would expect this to be no different.
Yeah, so Ray, the California is, I think it's a 12.6 APR. That's the limit on that out there. But work with your account executive, and if you are closing loans in California, you know, just be aware that was one of the APR for the state of California. So, Scotty, this is a good question from Brian. Is there a prepayment penalty on this?
There would only be a prepayment penalty if it was an investment property.
Right. Good. Thank you, Brian. Appreciate that question. Still some questions coming in here. Yeah, the 50% DTI does include the first lien also. So Stephen's an old customer of mine. So thank you, Stephen, for that question. Scotty, what about seasoning on bankruptcies and foreclosures? That's a question here from Rhonda.
Seasoning for bankruptcies and foreclosures. So for this program, And I'll read to you guys directly from the matrix here for foreclosures, deed in lieu, short sales, forbearances, modification, or 120 days late. Basically, we don't allow the borrower to ever have had one of those. For BKs, we'll go 60 months from the discharge date. 60 months from the discharge date.
Yep. Yeah. So, Scott, you can ask us about our bank statement. We know everything. So this is really still new. So we are, we're going through this, but I can still promise you the detail that our account executives do with their pre-quals will be second to none, as we've done on our traditional first liens and cash outs previously. So,
and again, I think we'll see those things expand as well, John. I'm sure you would agree as the market starts to get a little bit more comfortable with the program. It's still brand new to the entire secondary market. So I think as we see them get a little more comfortable, we'll see some of that stuff expand.
Yeah, Mark, we mentioned it early. This can go behind a government loan, so feel free to that. Scotty, let's go to pricing here. And I brought one up here. So so from our homepage, and I already have a scenario in there, but from our homepage, you would just go either here to our non-QM quick quote or down here, our non-QM quick quote. So we're going to go in there. So Scotty, talk a little bit about pricing and how the loan officer is going to get paid.
Yep. So you're going to come in here, you're going to select broker as your channel type. Your lien position, you'll notice, anybody that's familiar with our pricing engine, you'll notice that this is the new question that's been added now that this program has rolled out. So here is where you're going to select, if you were doing a first mortgage, obviously it stays at first lien. In this case, for the closed-end second, it's going to be a second lien. And then after that, you're really just entering the details of the program into all of your different boxes here. So your loan amount for the second lien, your credit score, and then we're going to ask you CLTV. So just keep in mind, guys, when you're calculating the CLTV, it's first mortgage balance plus second lien amount divided by appraised value of your property. There's your CLTV. Property state, is there any housing issues with the program? 0 times 30, of course, we're going to add on this one. What type of property is it? Cash out transaction. 24 months bank statements in this particular case on a primary residence. Borrower is a U.S. citizen. Are we waiving escrows? No. Lock period is 30 days. Interest only is no. Compensation type in this case is going to be borrower paid. So you'll see down at the bottom, we're letting you know that you've requested an 80% CLTV, but we do allow an 85 CLTV on this. At your 80% CLTV, the current pricing we're showing is 11.875. If we click on that view rates button, you'll see the entire pricing stack open up. There we go. And you'll see that the 11.875 is a true par rate. But if your borrower chose that they maybe wanted to buy that down a little bit, they do have some options there to reduce the rate.
Hey, so Scott,
go ahead, I'm sorry.
I apologize.
No, I was going to say, once you select your rate, then you're going to move on to your next step, which is going to be what you guys should be familiar with in our pricing engine to submit a pre-approval to us. And your second page, you can upload your 3.4 file if you have it buttoned up. If you don't, you can click next. And then in page 3, you'd go ahead and input all of your personal information. Obviously, select your account executive. And then at the bottom, you'll be able to drag and drop the 1003, the credit report, and the bank statements, if it's a bank statement loan, as this one is, and submit it to us for pre-approval. We're going to usually get that pre-approval back to you within 24 to 48 hours.
Yeah, so Scott, Todd's asking a question. What's the determining factor between using a 1-year 1099 versus a 2-year 1099?
Yeah, great question. It's really the same way we look at it on a primary. Determining factor would be which one shows us the most income.
Right.
We're going to look at both. I always recommend to my originators, whether it's a 1099, a P&L, or a bank statement program, send us the bigger picture, the 24 months, let us analyze it, and then we're going to see which one makes the most sense. Did the most recent 12 months have more income? Maybe we use that. Or maybe the most recent 24, if we look at the full picture, gave us a little more income. So it gives us some flexibility.
Scott, talk about reserves too. That was something that's come up here.
Yeah, so let's go to the reserves. I'm going to go back to take a look at the matrix. It's going to be 6 months reserves. The difference here is on our normal first mortgages, it's 6 months reserves on the payment. For the closed-end second, it's 6 months reserves on the total payment of the first and the second mortgage combined.
Yeah. So Scott, let's go. I'm going to show, one of the tools we've built, in addition to our quick quote, which is a great tool. And Scott showed us how to submit a pre-qual to us. And like I said, depending upon the documentation, whether it be bank statements, within 24 to 48 hours, we'll have that income back to you. And lately, it's probably been more within 24 hours. So, but Scott, I kind of input some information here on our blended rate calculator here. Property value, you're gonna want to know their monthly taxes, their monthly insurance, any HOA, what the first mortgage loan amount is, what the rate is, 3%, 30-year fix, and then I put in $150,000 for our second loan amount at 11.875 on a 10-year. And look, this is doing all the work for you. It's going to tell you your total payment, combined LTV of 75, and a blended rate of 5.958. Now,
right.
If everyone listens to some of the stats we have out there, if some people have, 27% credit card debt or student loans coming due, second lien's really not, you hear 11.87%, but your blended rate is, and you can tap that equity in your house. It's just really, it's a great way to go and create your own business.
100%. And really, to kind of just take a step back, what we're trying to do here, guys, is we want to give you all of the tools that you need to be successful and to be able to properly present this program and these scenarios to your borrowers. So as you can see, we just did the pre-approval, and let's face it, in real life, you don't have a credit yet, you don't have a 1003 yet, but you might want to present this option as you're making calls to your book of business. So you can literally go in and pull some data from the previous loan you closed and price out that closed-end second and basically hop over to this tool. And now you can plug in about what the loan amount is on that first mortgage, what we're doing on the second mortgage, and go to your borrower with hard numbers. Say, look, right now, if you totaled up all of your credit card bills and your first mortgage, if your total payment, let's say in this particular scenario, is $5,000 between your first mortgage and your credit card bills, well, I'm showing you right here how I can get you $150,000 in cash to pay off those credit cards and consolidate them, whether you do it on your own or you do it through the loan, either way. And I'm going to get you into a total payment of $3,906. I'm going to save you $1,100 a month from what you're paying today. So it's powerful. It's the tool is here. We're providing it to you so that you can be that true advisor to your borrower, to your clients, and go back to them with hard numbers and show them on paper how this makes sense for them. Because let's face it, when you price, and I'm sure a lot of people on here, when we price that scenario out, we're like, whoa, 11.875, right? But here we're giving you the tool to actually apply that number and say, well, let's wait a second. Let's blend this rate out and let's see where it's going to put us. In this scenario, if that borrower has a 3% on the first, 11.875 on the second, their blended rate is 5.958%. So let's look at it this way, John. If this borrower went to go do a straight cash out refi in today's market, what would their rate be, right? A hell of a lot higher than 5.958%. We all know that.
Scotty, that's a great point.
It's a no-brainer. It's a no-brainer especially when you run the numbers and present it to your borrower.
Scott, we talked about, the Americans paid $120 billion just in credit card fees and interest.
Yeah,
that's mind blowing. And there's over $1 trillion of credit card debt out there. There's 1.6 trillion of student loans. There's over $1 trillion in auto loans. So consolidating that is and using the equity and the appreciation that you have in your house. It's a great way to help you. Like you said, just in this example alone, save $1,100 a month. That's my, and that $150,000, Scott, isn't getting taxed.
Yep.
Right?
Yep.
And
100%.
so,
Non-tax.
yeah. So I think we look at that. So I know we're about 35 minutes past the top of the hour. Let's talk about marketing, Scott, because
Yeah.
I think second to none is so everything you've seen here, access to our program, access to do a pre-qual. You don't need login credentials. You don't even need to be approved with Angel Oak. But to access our marketing portal, you have to be an approved broker. And this is where you would go right up here, middle right of the top of the screen here. To log in, you do need credentials. Reach out to your account executive. If you don't know who your account executive is, reach out to me. I'll give you my email at the end here. Let me type in our awesome AE email.
And this is going to really tie it all together in terms of, showing that we're doing everything we can to provide all the tools to put you guys in a position to be successful with this program.
Yeah, and then we'll talk a little bit about some other things we have here from a marketing perspective, because, we talk about serving an underserved borrower, that self-employed borrower, that, that debt service coverage ratio investor. I believe this might be one of the most underutilized portions of our website that, really I challenge anyone on this call or anyone who's going to listen to this recording to really challenge yourself for 2024 to use a lot of these tools. So, Scotty, let's go into this flyer.
Yep.
We have over 24, almost 30 flyers out there, and yes, we do
every program we offer. We have a flyer that an originator or an approved originator with Angel Oak can tap into, customize specifically with their contact information, their logo, and use this flyer to blast email out to a database of borrowers, realtors, referral sources, whatever the case may be. It's free to any approved originator with Angel Oak. I don't know why it's not used more, but specific to the closed-end second mortgage program, here you can see this originator customize this form. Has 2 logos on here. We do allow 2 logos. So if you wanted to co-brand, maybe do an event, maybe co-market this with a realtor or a title company or whatever the case may be, you can do that. Photo at the bottom and her contact information here on the left. And it's just going to give you some brief pointers on how the program works. There's also some disclosure sections here at the bottom where you can choose equal housing opportunity, equal housing lender disclosures, or you can pop in whatever disclosures your particular company prefers to use. We offer this for every single program that we have, not just the closed-end second mortgage program. So,
Yeah, Scotty, so the great thing about this, Kimmy, who filled this out, she could click on any of these other flyers and it's already pre-populated there for her. Scott, I know we talked about pricing. Sean is asking, how do LOs get paid on this, Scott? Which is a great question. So
you're getting paid on the loan amount the same exact way you would on a first mortgage. So the compensation is based exactly the way you would on a first mortgage. We're not capping your compensation on this program.
Yeah. Great question, Sean. Obviously, no one wants to work for free, right?
Very important question.
Yeah. So, Scotty, let's go back to the other marketing things. We have social media flyers. I'll talk about this for a minute, Scott. We have bank statement. We have it dedicated. We've created the content for you. So we have bank statements for borrowers, and you can do it on Instagram or Pinterest, Facebook or LinkedIn. We have the content here already. We have the image already built for you, or you can market the bank statement program to realtors. 9% of the loans we close here at Angel Oak are actually realtors. And, I blew past the beginning of this presentation, Scotty, we were supposed to launch a poll question, which I forgot to. But typically, when we do this, we ask how many people have originated a non-QM loan in the last 12 months. And statistically, it's about 65 to 70% have not. So now take those numbers, and what about educating your referral source on non-QM loans? I bet you 95% of them don't know about it. So, so this is really a great marketing how to market yourself. We have whiteboard videos, and then, Scotty, this is probably the most powerful presentation of educating your referral source, right? Scotty, you do a lot of these. I know that. So,
I do. I encourage this with all of my accounts, whether it's at the originator level or the mortgage broker business owner, branch manager, whatever the case may be. These are PowerPoint presentations, both a short version and a long version, that we at Angel Oak have invested the time to put in and build out for our originators that are designed for you to present these products and programs to your realtor community, to your referral sources. The best thing about them is they are 100% customizable. So every single page can be customized with your logo, your colors, your contact information. You can make this look as good as you'd like. So what I've done with some of my accounts is I've sent this to them via email and say, hey, look, customize this to your liking. Plug in whatever other products and programs you might want to plug in, whether it be conventional or maybe some other non-QM programs that Angel Oak doesn't offer, and save it and share it with all of your originators. And when you guys start scheduling presentations to your realtor community, I'll come out on your behalf and I'll help present. And we'll go through the slideshow together with your loan originators, whoever's presenting, and I do them all the time. I can tell you this, guys, my originators have all said the same thing. It's unanimous. This is one of the best ways to get realtors into a room and present to them. The presentation is marketed and presented as, hey, non-QM programs or portfolio programs or programs for self-employed borrowers and investors, but you're obviously still going to talk to them about all your conventional programs, down payment assistance, FHA, Fannie, Freddie, et cetera. So it's a matter of how do you get as many realtors in the room as possible that you can communicate to, and this is a great way to do it. In the previous screen, you'll see that we actually offer a flyer where you can set the date for your time for your presentation and use that flyer to blast it out to your database and promote it. So I recommend to everybody on this call, set one up, give yourself 30 to 60 days to time ahead to prepare for it and to get the word out on it. Speak to your local account executive who'd be more than happy to go out there with you and present these products and programs, talk about everything that we just talked about and more. And there's no better way to get realtors in a room. I'm talking, I've done presentations 30, 40, 50. We had one that was 75 realtors in a room talking about non-warrantable condos.
Yeah, so Scotty, an example, I'll use Stephen here, a broker of ours, as an example. If I go in and present on Stephen's behalf, I kind of jokingly go in there. I go in there like I'm in the witness protection program. I don't say, I don't even introduce myself. I'm just one of Stephen's investors. Stephen has access, exactly what you said, Scott. Stephen has access to a lot of other programs, a lot of other investors, but I am just one of Stephen's investors, and I'll talk about bank statements on his behalf. I'll talk about DSCR on his behalf. And I say to the realtors in the room, so when you get a self-employed borrower, Stephen has closed self-employed loans with us on bank statements, you're going to refer that person to Stephen because Stephen's an expert in Angel Oak's process and Angel Oak's programs. But we'll go in and present on your behalf, and it's powerful. So you take a number like 70 people in a room, and if you do the math, with 9% of those realtors that Angel Oak closes loans for are 9% are realtors, you're probably going to get 4 or 5 loans out of those realtors just in doing that presentation, and then you're the go-to person.
Never fails. I've never to this date had an originator do an event and regret it.
Scotty, I have one last question here. And so the calculators, Stephen asked the question. So we have a tab up here for calculators. We have our blended rate calculator, and we also have our debt service coverage ratio loan calculator. Guys, Angel Oak has done all this work for you. We make it as easy as possible to close loans. So just want to also, I'll do a shameless plug here. Next week, a week from today, we are doing a debt service coverage ratio deep dive product webinar. That will be the last one of the year that we have planned right now. So, and also again, this is being recorded. There's a short survey afterwards. We're always looking for feedback. This was our first closed-end second presentation, so I'll look forward to getting some of your feedback. So look forward to you guys filling that out for us and providing us what we can do better and what you also liked about this. So Scotty, anything in closing?
Yeah, in closing, as I said when we started, I really feel like this is a critical and much needed product program for the marketplace, considering where the market is today. As an originator, and I'm an account executive, so I only work and get paid on volume as well. So I'm feeling it also, right? Our volume is down across the board in the industry for a number of different reasons. Refinances, that business is gone completely. How are you going to replace some of that volume? We're going to continue to go after the purchase business. We're going to continue to go after our realtors and develop those relationships and nourish them. But how can you replace some of that lost volume? This is it. Closed-end second mortgages, HELOCs, it's a no-brainer. And in addition, it's giving you the ability to add value to your borrowers and your book of business, your client base, because you're going to them in a time of need with a solution for them, an option for them. And if they don't need the money, you had a chance to reach out to one of your past clients and had a good conversation. And who knows, maybe they're looking to sell and buy another property or know a family member that does, right? It's a no-lose situation. So like anything else, John, we know not everybody on this call is going to go and do the work and start reaching out to their database and learn more about this program. I hope everyone does. Those that do, I think you're setting yourself up for a lot of success. I really feel like this can help generate a lot of volume, and it can help add a ton of value to your clients, to the borrowers, and to the marketplace, specifically for a lot of, for everybody, really, not just bank statement self-employed borrowers, for everybody.
Yeah, Scotty, yeah, it's great. I just put my email address and phone number in to send it to everyone in that question queue. So it's out there. So if you don't know who your account executive is, obviously reach out to me. I'll get you in touch. I know Amy's got a scenario here. So Amy, we appreciate you getting on this call, and everyone who's on this call, thank you. And if you close loans with Angel Oak, we appreciate your business. If you have not, really give us a shot. Scott's just, one of multiple account executives. He happens to be the best, but he's one of multiple account executives across the country that we have available to you. And, our average tenure for account executives is well over 5 years. Scott's been over here over 7 years. I've been here almost 10. So thank you for everyone for participating today. If we don't speak to you before, have a great, safe holiday and enjoy your family and friends and loved ones. Scotty, thank you. Love you, brother. You're always a pro. All
right. Happy holidays to everybody.
Thanks. This recording will be sent out before end of day tomorrow. So thank you, everyone. Appreciate it. This.